Good morning, this latest market news. I'm Uliana. Asian shares edged mostly higher Wednesday after a volatile session overnight on Russia's brewing economic crisis and as investors watch out for the US Federal Reserve statement later in the day. The Nikkei 225 was flat, while Australia's ASX 200 gained 0.6% and Korea's Kospi edged up 0.3%. Investors appear to return to the region after falling oil prices, jitters in Russia and worries about the tighter US monetary policy battered emerging markets early in the week. At the close of US trading, the Dow 30 fell 0.65%, the S&P 500 index fell 0.85%, while the Nasdaq Composite Index fell 1.24%. In the currency market, the US dollar traded in the mid-116 yen range in early deals in Tokyo. The dollar is currently trading at 116.73 yen against Tuesday's close of 117.33. US crude oil snapped a 4-day losing streak to end a tad higher on Tuesday after fluctuating for much of the day as the dollar weakened against a basket of major currencies on some soft data from the US and China, and ahead of the official weekly oil report from the Energy Information Administration. Crude oil futures for January delivery ended up $0.02 at $55.93 a barrel on the New York Mercantile Exchange after sealing a high of $57.15 and a low of $53.60 intraday. There is plenty of macro news scheduled today, providing the raw material for revising economic assumption. The US publishes its monthly report on consumer inflation, although Wednesday's main event comes later. The Fed's policy statement and new quarterly forecast, followed by Fed Chair Janet Yellen's press conference. US Consumer Price Index 1330 GMT. Today's inflation report will be closely read as the crowd awaits the Federal Reserve's policy statement and updated forecasts that follow. The consensus view sees headline consumer inflation dipping 0.1% in November versus the previous month, while core inflation is projected to post a slight 0.1% increase for November, according to econoday.com. It was the latest market news provided by ICO FX. Goodbye.